Canadians are experiencing some angst right now. Our worry is that could lead to some bad real estate decisions. So if you're worried, we hear you, but it might help to let calmer heads prevail and shake off the what ifs. Let's try to look at the positives right now. Number one, we've seen another 0.25 rate cut by the Bank of Canada. So borrowing rates are better than they have been in a while. Number two, we have a well-supplied housing market, keeping average annual home price growth at the rate of inflation. And number three, the average selling price should increase moderately in the GTA over the course of the year, which is good for both buyers and sellers. So why is moderate price growth good for both groups? Well, you don't want prices to rise as a buyer. Moderate increases are expected. And for the benefit of sellers, it's obvious, as it means more profits. But overall, it means the playing field will even out, so no one has the upper hand at the negotiating table. Sellers don't have to worry as much about lowball offers, and buyers don't have to fear the dreaded bidding war, so it's a win-win. Now, according to TRREB Chief Market Analyst Jason Mercer, a growing number of homebuyers will take advantage of lower borrowing costs as we move toward the 2025 spring market. Nothing new there. What is new is the doom and gloom caused by our neighbors to the south. So what's changed for buyers is that although now could be a good time to buy rate and price-wise, you want to feel confident that not only your finances are in order, but also that your job feels reasonably secure. One last thing for buyers. As we start to see increased transactions, that will likely lead to a moderate uptick in average selling prices in 2025. So please keep that in mind. We do advise to proceed with caution though, because we really don't know what type of negative impact the trade disruptions might have on the economy. Will the tariff threats raise their ugly heads again in March? Who knows? If they do, Jason Mercer warns that the positive impact of lower mortgage rates could be reduced. That could be temporary, but it is still a little worrying. For sellers, a year-over-year January increase in selling prices of 1.5% has brought overall average prices to $1.4 million and detached homes to $1.3 million. So as reduced interest rates entice more buyers to jump off the fence, the high inventory should start to be absorbed, which could lead to increases in demand and ultimately push prices up. The bottom line is there's a lot of shoulds we're living with, so that uncertainty might have you second guessing your real estate plans, and we totally get that. If you want to talk things out based on your particular circumstance, feel free to reach out to our team. We'll help you consider your options and avoid making bad decisions.